Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, investors are clinging to one Chinese factory stat to upgrade their risk-on mood. Global equities are stronger today, building on gains from their best quarter since 2010, as investors cheered upbeat factory activity data in China and signs of progress on the US-China trade front. The S&P 500 is up 1% so far today. Shanghai was up an impressive 2.6% yesterday. Japan and Europe did well too. American economic data released overnight, however, was ho-hum. US retail sales actually shrank in February from January, although they are 2.4% higher on a year-on-year basis. The two factory PMI releases for March were not inspiring either. The ISM one posted a minor rise. The final market one was downgraded. US construction spending data for February was also ordinary, up 1.1% from the same month last year. And American business inventories keep on rising, which is not a good sign. We were sceptical this time yesterday when we reported the official China factory PMI, which showed a jump back into expansion territory. Yesterday afternoon, the private Caixin market PMI was also reported, and that also showed a good return to a modest expansion. It seems the recovery in factory fortunes in China is for real. Markets around the world noticed. And the Xi Ardern meeting is being reported internationally as part of China's attempts to pry New Zealand away from its close relationship with the US. In Australia, their home builders report unusually low sales in February, and CoreLogic is reporting that Aussie main centre house prices are down the most since the 1990s recession. Property prices in Sydney have now fallen almost 14% since they peaked, while in Melbourne they are down almost 11%. Meanwhile, business conditions have improved across the ditch, bucking a 6-month downward trend. US Treasury 10-year yield is up strongly today, up by 8 basis points to 2.49%. Their 2-10 curve is wider at 17 basis points, while their negative 1-5 curve is narrower at 10 basis points. Gold has dipped another $2 overnight to $1,290 an ounce. US oil prices are firm again, up $1.50 to start the week, now just on $61.50 a barrel, while the Brent benchmark is at $69 a barrel. OPEC oil output has hit a 4-year low on Saudi cuts and the collapse in Venezuela. And the Kiwi dollar is holding this morning at 68.1 US cents. On the cross rates were marginally lower at 95.7 Aussie cents, and against the euro we're at 60.7 euro cents. That leaves the TWI at 72.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.